Getting my slides. I'm not sure they're quite loaded yet. They're giving me the thumbs up. Let me see if I can get them up. All right, while I'm waiting for those to get loaded up, the things I wanted to talk to you all today about are a lot of the trends that we're seeing in the industry. And what I spend a lot of my time doing is talking with a lot of the institutional investors. So the investors that put their money to work in these tobacco stocks and all the things that they've been concerned about and asking me about. So some of the topics I wanted to touch on today are what's really going on with combustible cig volumes and they're decelerating, how much faster, Juul, the resurgence we've seen in the E-Cig and vapor growth, really primarily being driven by Juul. Also touch on the FDA, just in terms of how we're thinking about that and what the concerns have been on Wall Street regarding the FDA. And then I wanted to talk to you guys a little bit about Altria's decision recently to invest in Juul. They took a 35% stake and what that means for the future of this industry. So I still don't have slides. Okay. Sorry about this. There's a slide that shows cig volumes decelerating. So what we've been seeing over time is that cig volumes have been declining about 3 to 4% annually, but what we saw in 2018 was volumes down more than historical trends. So in Wall Street, there's been a really big concern from a lot of the investors wondering if, oh my God, volumes are dropping off the cliff, no one's smoking anymore. The companies we invest in, such as Altria, they're not going to be able to make money or as much money as they used to. So there's been a lot of concern about this and overreaction in my opinion. So we've done a lot of work on this and where we think this industry is heading. So where cig volumes are decelerating, I think what is actually offsetting that is that volume is pivoting to a lot of these reduced risk products. So we saw volumes decelerate quite a bit in 2018, and there were some one-time issues that were impacting it, like a sharp excise tax increase earlier in California weighed heavily. For a period, there was higher gas prices that impacted it. Now, as we look forward, we think in 2019, volumes will be probably below historical levels, but maybe not as much as 18. But I'm actually predicting that volumes will continue to decelerate because I do think this industry continues to pivot towards reduced risk products. I mean, I think it was 5-6+ years ago that I made a prediction that consumption of reduced risk products would surpass consumption of combustible cigs in the next decade. I think that's still going to happen. I still don't think I have slides for you guys. I'm sorry about this. So my next slide is showing a picture so you guys can visually see how fast Juul has been growing. The growth has been tremendous in the last year, year and a half. It almost, seemed to kind of come out of nowhere. It's gotten a lot of negative publicity in terms of the underage usage of this product, but there are quite a few adults that are using the product. So the growth has been tremendous. And what I see is in the next, again, 5-10+ years, that e-cigs or vapor reduced risk will continue to take more and more share of the total nicotine pool. Juul right now represents about 30% of the overall e-vapor category, and that's across open and closed systems and really all channels of distribution. I am looking for e-vapor to grow through 2023 by about 15 to 20%. I'm not sure I'm getting slides today. All right, the next one. let me talk about gas prices, because something that really does impact volumes is the gas prices. And we've seen gas prices come down a lot, which I think is going to bode well for cig volume consumption. But as we look out into 2019 and beyond, gas prices are expected to kind of normalize and tick back up, which is something to consider. But a positive right now is the consumer confidence levels have been very high and strong, and I think that bodes well for this industry as well. We also have a slide to show you that cig volumes actually are correlated with gas prices, so inversely correlated. Of course, when gas prices rise, cig volumes get negatively impacted, or vice versa. Overall, I would say that the tobacco consumer is in good shape. And in terms of this Tobacco Talk survey that we put out on a quarterly basis, and sometimes more frequently, a lot of the retailers and wholesalers are also seeing this in their own stores, as well as the traffic. I think this has been mixed depending on parts of the country or the type of retail store you might have. But one of the things, my slides are up, that our contacts have been telling us is that warm weather has actually impacted their traffic into their stores. So let me get, this was the gas price correlation, you guys, so you can see how cig volumes are, again, correlated to gas prices as they rise or come down. Volumes are impacted. This is the slide that I was just talking about in terms of our Tobacco Talk survey. And in general, you know, one retailer noted that 2018 really did prove to be a good year in tobacco. Customers really tend to purchase more traditional cigs than they have seen in the past with Roll Your Own, and they did note that foot traffic is up. So I think that's been quite positive. However, as I look out, and I ask my retailer contacts this question, you know, they're still anticipating some pressure on their traffic. And when I asked what they're anticipating for their cig volumes in 2019, you can see from this chart, if I can use this, right here, you know, they had predicted that cig volumes are going to be down about 1.9% in 2018. And now when they look out for this full year in 2019, they're still expecting cig volumes to be down quite a bit, about the same as last year. But you can see this trend has continued to decelerate. So again, this is sort of what I've been predicting. Now, when I ask the retailer contacts, you know, what are they seeing in terms of negatively impacting cig volumes, one of the key or top reasons has been that it's been smokers shifting to e-cigs and or dual usage. So that's 30% of our retailers did indicate that that's really been one of the biggest negative trends or negative impacts on cig volumes. There are other factors, of course, pricing, you know, weather they mentioned, I would say price of gas they called out, but number one really seems to be the strength that we've seen in e-cigs and vapor. And as innovation keeps hopefully coming to the marketplace, I would imagine that that could accelerate in the future. I thought this quote, the last one at the bottom of this slide, if you guys can see in the back, was interesting. One of the retailers called out that Gen Z, which, my God, they're young, they're not smoking. Retails are too high. This retailer said pricing power is dead, and people are moving to vape just as the FDA moves to suppress vape, which is pretty interesting. Next slide. So we recently asked our retailer contacts and wholesaler contacts when they are expecting the next cig price increase. Historically, this industry has taken about 2 increases a year, and it's typically led by Altria. Once again, the vast majority of retailers expect Altria to lead a price increase, and they're anticipating towards the end of March. They're expecting about, I would say on average, a 9-cent per pack increase, which has actually been closer to what we've seen in the more recent history. And keep in mind that Altria has stepped up the per pack price increase, and a lot of that had to do with the California state excise tax that went into effect. So it'll be interesting to see what in fact they do, if it will be in March. It seems logical because it was around this same time last year. bottom line, I'm of the view that I think this industry still does have pricing power, and I can see that in the margin expansion and their ability to offset some of the volume pressures. This is a chart to show you what they've done historically in terms of when they've taken price increases. And you can see more recently, this is where things have stepped up from, historically you've had anywhere from 6 to 7 cents per pack, and then it's stepped up to about, 10 cents a pack, and now the prediction is it will be a 9-cent per pack increase. Now, something I've monitored very closely for, almost 20 years that I've covered this industry is tracking the relative and absolute gap of Marlboro prices to the cheapest brand on the market. And these two charts show you that. The one on the left is the absolute price gap, I should say, actually, and then the one on the right is the relative gap. So you can see on an absolute basis, that gap is widening, which is not necessarily great for the manufacturers or for Altria. This is what they have to manage. The one on the right is key because they very much manage to that relative price gap. So this is something that they track closely to see how much pricing they can put into the marketplace. What has happened more recently is that a lot of the lower price brands have not followed the large manufacturers' price increase, so that gap, especially on an absolute basis, has widened. And I'll show you some slides in a little bit, and Don mentioned this too, is that we've seen an increase in the 4-tier brands. They seem to be growing quite fast. But I think right now, the gaps are pretty steady, where I do think that Altria will be able to lead another price increase relatively soon. All right, I wanted to walk through some of the key brand trends that we've seen in Q4. And this is a chart when we asked in our Tobacco Talk survey the trends for the different brands and categories or segments, meaning the deep discount or 4-tier brands. The winners in terms of the fourth quarter results really have been Marlboro in terms of their share has been slowly and finally, quite frankly, improving. And then you can see the huge improvement for the 4-tier. And that's something that, I would say earlier in 2018, Marlboro was not faring so well, and again, a big concern by investors. And it took Altria some time, but slowly with stepped up promotional spending and loyalty programs and improvements that they made there, they've been able to stabilize Marlboro's share, which is critical for their long-term success. And these are a couple more charts to show you how Marlboro's share pressure has been receding. I mean, the chart on the left is a very long-term or historical one. It goes back from 2003. I don't know if you can see the numbers in the back. But slowly over time, Altria has been able to continue to take share with Marlboro. But as you can see in the more recent history, Marlboro's share has flattened off. So really now this company has turned from trying to take a share point a year with Marlboro to really just maintaining Marlboro's share, but it's all about maximizing profit. And that I think is critical. So you guys think about that and whatever you're selling in your stores and what Altria's strategy might be. It's shifted a bit in terms of now much more focused on maximizing profit. And again, I say that and think about that in the context of where they see their company in the next 10 years and what their company is going to be comprised of. It's going to be so much more than Marlboro. They own a stake in Juul. They're ultimately going to have, I think, ability to commercialize IQOS, and they're going to continue to pivot their business into these other reduced risk offerings. These are a couple slides, or one slide, I should say, on Reynolds as well as Imperial Brands. This is Nielsen data, you guys, just to kind of give you a sense of what's going on. Nielsen data has not been that reliable at all, to be honest. But if anything, what we're seeing in the most recent history of these two companies is that their share seems to be showing some signs of improvement. You can see here that Reynolds' total share is improving as well as Imperial in the last very, I guess 4-week periods, the few periods, which is encouraging for them because they've been under pressure. All right, I wanted to touch on the FDA's actions or recent decisions. I mean, both Megan and Don touched on it, but just from my perspective, or maybe Wall Street's perspective, you know, it's interesting when the FDA has come out with all of these statements, and they've been a lot more vocal lately. I think one of the positives, believe it or not, takeaways is that they seem to now be better embracing this continuum of risk in terms of their decision to extend deadlines for a lot of these e-cig companies that are on the market to give you guys more time to get your applications in. Now, I know that there are some more recent threats in terms of what they may do there, because there's definitely a huge concern from them about the youth e-cig epidemic, as they've called it. So there's a lot going on right now, and there's a lot of concern. But I think broadly, some of their actions certainly suggest that they understand that there's different risk levels with all of these different nicotine products. So hopefully, it will encourage, you know, ultimately consumers to shift more rapidly to vapor and RRPs. And I think about that in the big context of everything from lower nicotine levels, as they've discussed, and/or the proposed menthol bans. And this is all kind of focused on combustible cigs, and ultimately could pivot more smokers faster to some of these other reduced risk categories. So this is, in November, the FDA did announce a 5-point action plan to address, again, the e-cig youth epidemic. And both, you know, Don and Megan kind of walked through some of this, so I won't repeat too much of it. I think you guys are very familiar, but I wanted to put this slide in the presentation just to highlight for you, from in my world, the hyper focus and concern that I get from investors. And if you look at any of the tobacco stocks, they've been under substantial pressure. This is once again, you know, an overhang for this industry. There's a lot of uncertainty, unknowns. You know, no one knows for sure exactly what the FDA is going to do and when, and then how everyone's going to react. So what my job is to try and figure out if the market has overreacted to some of these concerns. I think yes, there is some uncertainty and concerns, but overdone in terms of the valuations of the stocks right now, and ultimately who is in the best position to win over the long term. And this is where I come back to one of our top stock picks, which is Altria Group. And I say that because of what they have done more recently, which is taking a stake in Juul, as well as they have access to eventually distributing and commercializing IQOS in the US. All right. Now, of course, which I would expect that broadly the retailers do disagree with the FDA's e-cig action, which makes a lot of sense. And this came from our recent quarterly tobacco talks survey. And you can see that I think it's 77% of them disagree with their extreme, you know, reaction to this epidemic that they are seeing. This is the FDA. So some of the comments from the retailers I think are interesting. You know, one noted that moving the legal age and focusing on removing youth-targeted marketing would have a similar effective impact. Now that's a good point, and that's not something that the FDA really needs or can do. It's more of Congress, but that is probably something that's going to happen. Altria is fully behind supporting increasing the age to buy tobacco products to 21. I wouldn't be surprised if something like that happens in the next couple of years. And then I think about the online sales. Now again, that's not FDA, but I wouldn't be surprised if there's some actions in the future in terms of trying to address this youth e-cig epidemic. That could be another effective way. So there's a lot of debate going on right now. It's very controversial. Retailers, of course, don't like these changes, anything that's happening in their stores, because, you know, e-cigs, Juul especially, that's been driving a lot of their foot traffic. I mean, Don put up a lot of statistics, and it's huge growth, huge dollars coming in their store. So they don't like these changes, or these proposed changes. Now, I did ask, because these changes, some of them were proactive, some of the companies did already pull their flavors from the stores, and asked the retailers what kind of impact they're seeing on their e-cig volumes. It wasn't 100% saw a negative impact, interestingly enough. It was, you know, 42% said yes, they are seeing some negative impact. 20% said not much at all. almost 30% said no impact at all. So I thought this quote was interesting, which is why I put it on this slide. The first one, which says, initially sales fell off, way off, but as people realized that whatever the FDA did would take months, if not years, things normalized somewhat. Covering the group for 20 years, anytime there's a change, whether it's a sharp excise tax, whether it's federal or one of the states, you typically see a kind of a knee-jerk or sharp reaction by the consumer, the person or individual that is a user of the nicotine, and then they kind of adapt and they change. Like Don pointed out, they might drive, they're going to find their product. So it'll be interesting to see how things pan out and eventually what the FDA does. I'm not convinced they're going to be able to implement all of the things that they are threatening. And I think personally, the FDA's bark right now is worse than their bite. All right, nicotine. Megan walked through this a lot in terms of what they are trying to do, the FDA. You know, we also have that chart that Megan showed you, the 9-step. It's a very, very lengthy process. So in my world, what I say to investors, the good and the bad is it's going to take a very long time. It could take 4 to 5 years before anything actually changes in the marketplace, we as consumers, what we can buy. That's good, but the bad is for an investor who wants to take a stake in one of these tobacco stocks, there's that overhang and uncertainty, and no investor likes that. And that's where you're going to see, in terms of valuation, some of the overhang. So this is, what I spend a lot of my time trying to figure out, when we're going to get more clarity, if at all, with some of these potential actions by the FDA. Now, one other comment on the nicotine reduction. Very important, this is on combustible only. So I think about it again, let's say they're successful. I'm not convinced they will be, but say I wake up someday and nicotine levels are reduced substantially in combustible cigs. Where do consumers go? Who's in the best position at that point in the future? This is again where I come back to a company that has a portfolio of nicotine products, and that's where I'm thinking about Altria now with their stake in Juul, as well as ultimately IQOS, because again, substantially reduced risk, and if the FDA's goal truly is public health, they're not going to want to do anything with these reduced risk products, and if anything, they want to encourage conversion. And that's the way I think the big companies are looking at it. Now, this is the retailer's view of the FDA's lower nicotine strategy. Broadly, most of the retailers expect it to be negative for combustible cigs, which you would imagine, obviously, if nicotine levels are reduced. Now, again, we don't know if they're going to be reduced all the way down to that very low level, or is the FDA going to propose a slow, reduction over time? Something the FDA absolutely has to consider is unintended consequences or a black market. So they need to make sure they're careful ultimately with what they propose. And then a point on this slide, over 50% of the retailers that we surveyed in our Tobacco Talk survey expect the FDA's new strategy could adversely impact their combustible cig consumption. One guy said a de facto ban on cigarettes, and then another noted it will create a black market, and I think they are right. And then this was the other point I was making earlier. Over 67% of the retailers see a favorable shift in the FDA's stance in favor of reduced risk products. So if there's a silver lining in a lot of this, I think that's overall something to consider. All right, menthol. How big of a risk could it be? It's already happened in 5 jurisdictions, and Don, walked through a really good example of what transpires. My view is, I'm still standing on stage, probably 5 years I've been standing on a stage saying this, I still don't believe that the FDA will be successful in implementing a ban on menthol. I know they are getting louder. They're acting like they've said it, but they still have to make sure that the science supports it, and they have to also make sure there are no unintended consequences. Menthol volume in the US for cigarettes, it's 35%. It's not so easy to just ban it. Now, say I'm wrong, I wake up 5 years and you cannot legally buy menthol cigarettes, what do those consumers do? I don't think they're going to stop smoking. Maybe some will. That could be the good in terms of, from a public health standpoint. I think many will convert to non-menthol of those same brands, but those users of Newport, which is the most popular menthol brand, I think the non-menthol variant of Newport isn't as strong or as good, and they might go to a non-menthol Marlboro, which is clearly the leading cigarette brand. So in that regard, Altria, I think, has a competitive advantage. Or more importantly, I think a lot of these consumers will pivot towards whether it's Juul, IQOS, any other E-Cig brand, and there are going to still be many on the market, which is great. And that's where I think that could accelerate. And ultimately, maybe that's what the FDA is trying to do, but it's a really tough thing to try and implement. But that's kind of how I'm thinking about it. But this isn't next quarter. This is 4 or 5+ years into the future. But this is what the companies are thinking. The companies I cover, which is Altria Group, BAT, this is how they're thinking about the industry of the next 5, 10, 20 years and where they need to be. And Altria is trying to pivot faster, given with the direction of the industry. All right, sizing the vapor and the total nicotine pool. So again, still early. It's only I guess it's been 5, 6+ years. I'm trying to remember when kind of E-cigs hit the market. It's grown rapidly. I still estimate that E-cigs or e-vapor, it's still under about 10% of the total US nicotine pool today. But I do think, although the work we've tried to do on this, I think it could get to 30% by 2025. So a report we wrote recently is there's a lot of concern in the market. I mentioned earlier about cig volumes decelerating, no one's smoking, big companies are going to lose money. My view is, look, I actually think this industry might be more profitable than ever before as I think about the total nicotine pool. And again, Don touched on this, but I actually think it could grow faster in the future, not just on volume, and I think actually retail sales as well as profitability. So when we tried to analyze this, and it's hard and it's far from perfect, I estimated that the nicotine pool over the last several years has been kind of close to flat or maybe up 1%. I think in the future, through 2025, that the total nicotine pool could grow by an average of about 2.5%, maybe 3% through 2025. But it's the makeup of that nicotine is going to shift, and that's those skinny, tiny little bars on the right. We've got all the data to back it up, but you can see that cigarettes are going to comprise less and less in the future, in my opinion. And then you have a lot of these reduced risk products, E-cigs, Juul, IQOS, and I don't know, maybe some other technology in the future that's going to encourage more and more smokers to pivot. So I do think that I've got a different view that there's a lot of concern right now, but I see that the future for this industry is actually quite positive. It just depends on who you are and what you're selling and what's your position. All right. This is a chart that we've published for a number of years just to try and size and give you guys a sense of where we see the vapor sales. And I mentioned, it's just under 10% today. We estimate by the end of this year, vapor sales will be $9 billion, but I think it will surpass $10 billion by 2020. And then I try and show a breakdown of e-cigs versus the larger devices and where the products are sold, whether it's online, C-stores, non-measured channels. Interestingly, maybe 3 years ago, this was flip-flopped, meaning vapors, the VTMs, the tanks or the mods, that group was larger than e-cigs, but I think with the success of Juul and some of the other e-cigs, you've seen that grow rapidly. I mentioned this, that I do see the nicotine volume profit pool growing faster, and I do think e-cigs will contribute more retail dollar sales than cigs are losing. I think that's where investors are misunderstanding this, and again, I don't know for sure if I'm going to be right. We won't know for another 2-3 years, but that's kind of how I foresee this industry playing out, and this is some of the work we've done. Juul does remain the market leader by a wide margin, but there's definitely still a lot of room for multiple winners. I've always said that, and I still believe it. All right, so this, I think, is interesting because there was a view by investors that with the cig volumes decelerating, that was so negative, but I think everyone thought, this I'm simplifying it, that was almost a 1-for-1, that Juul was taking all that share, and remember, Altria didn't have a stake in Juul, so they viewed that as very negative for Altria, just losing sort of everything. I do think Juul is cannibalizing certainly some cig volume, but I think what is underestimated is that Juul is also bringing in new users. So I think, as I mentioned, this nicotine pool that I see is growing faster. It's coming from new users, I think dual usage, and per caps increasing, okay? So it's not a 1-for-1, just every cigarette smoker, or when a cigarette smoker switches to whatever E-Cig, they could consume more, or again, new users could be entering this category, and I'm not referring to underage usage. I'm also very much thinking about adults, and there's evidence of that. So anyway, this is from our Tobacco Talk survey in terms of when I asked the same question of the retailers. They see the bulk of it coming from new users in terms of Juul's success, and also at the expense of the other E-Cig brands. Now, I also asked what they thought about Altria's recent decision to spend almost $13 billion of investors or shareholders' money to take a 35% stake in Juul. Broadly, the retailers, surprisingly, viewed the decision pretty positively. It was over 50% viewed it as favorable. It was 23% were neutral on it. Some certainly viewed it as negative. But a lot of the retailers, I guess, were thinking about it somewhat similar to how I was, that Altria does have maybe what could be viewed as a better relationship with the FDA and could help steer them. And obviously there's some new announcements that have come out from Gottlieb, I think it might have been today, a little bit last week, about calling in the CEOs of these companies again to talk with them about some of the changes they've made or haven't made. And again, it's all about the kids and the epidemic. And so one retailer noted that he thinks it's a smart move as Mark 10 was not selling very well, so now they have a 35% stake in the #1 vapor company. So broadly viewed as favorable by a lot of the retailers, Altria's decision. Now, Juul and IQOS, a lot of this shift that I mentioned, or some of the things I was mentioning earlier about the FDA and some of the things that they want to do, whether it's reducing nicotine levels or banning menthol, I think Juul, E-Cigs, IQOS are really the strongest beneficiaries of some of this. And it's not yet approved, which is IQOS, and I think a lot of you have heard of it, probably have seen it at maybe the NACS show. They had, Altria was showing it at their booth. This could be any day now. It's to be honest, shocking that it's taken the FDA this long. It's probably 2 years now that we've been waiting to some extent, and it should be a 6-month. That's typically their standard. I actually started wondering, because they also have, this is Philip Morris, has put in an MRTP for IQOS. So they're ultimately hoping to be able to make a modified risk claim with IQOS. I have to wonder, maybe we're going to get both at the same time. I know it seems crazy, but I don't know, other than this E-Cig youth epidemic, that's what the FDA has been hyper fixated on. This is something that they really should be doing, because again, the good and the bad, as I look at it with IQOS, is from the FDA standpoint, is IQOS is not appealing to my teenagers, and I do have 2 teenage daughters, so I'm very familiar with juuling and how popular this has become. That's the good and the bad. The good is, get in the market if you want to convert and have more smokers pivot to these reduced risk products. You need to have more of these products in the market, and that's what the FDA really hasn't been doing and needs to step up and figure this out, in my opinion. All right, IQOS internationally, and why I'm still quite bullish on it. This is, Philip Morris has been selling it in 38 markets. They've had actually a lot of great success. The big markets where they've taken quite a bit of shares, like Japan and more recently Korea, they have over 16 share in Japan, but many other markets throughout Europe and parts of Asia, Russia, they are slowly building share. They have new innovation that they put into the market. This is their next gen devices on the top. This is IQOS 3, IQOS Multi. Those won't necessarily come in the US right away. It will, but again, this is still what we're waiting for. So both companies, and I do meet with and see the CEOs of both companies, they enough where they, again, say repeatedly they expect a decision any day. They're also very surprised it's taking this long. Retailers, because so much has been going on and they still don't have IQOS, but they've heard a lot about it from Altria and seen it. I asked them if their view on IQOS has changed, given Altria's decision to take a stake in Juul. No, not at all. Interestingly, they still kind of think, or favorably, they still plan, 80 or 95% of the retailers still plan to carry IQOS in their stores. And when I asked if you plan to carry IQOS, will you give Altria incremental space? The majority, 63%, said they will. So that's something, of course, that Altria would want ultimately to get as much space as they can. Now, one retailer noted, which I thought was interesting, he said, I think IQOS is a different proposition that needs to be conveyed through social media as the closest thing to traditional smokes without the negative connotations. Again, this is heat not burn tobacco. So he thinks if they can create the same buzz that Juul did, it will be hot. So, well, jury's out. We're gonna have to wait and see how well or successful Altria ultimately is, assuming the FDA approves it, how it can perform here. I don't think, and let me be clear, I do not believe IQOS will be as successful as what we've seen in Japan. That was a very unique market, but I do think it can do well here as another reduced risk offering for smokers. All right, I'm going to go through this because that was a slide that Megan and Don have touched on that, the FDA's decision and timelines. This is just to give you guys a sense that, I just spent a lot of time talking about Altria. It's a global industry, and there's a lot of reduced risk technology in so many different markets and by all the global tobacco companies. And from BAT, who has their very successful Glow platform, we've got Japan Tobacco with Plume Tech, and then of course Imperial Brands, they seem to be prioritizing MyBlue right now. So it's not just about Altria, but right now that seems to be what all investors are focused on, given, of course, the recent decision to acquire a stake in Juul, and that's been incredibly topical from the FDA standpoint. There's a lot going on, and again, it just suggests to me globally, I see this, the nicotine pool, very much, I think it can also grow faster and continue to pivot to all of these different types of reduced risk technologies. And ultimately, in my view, and this is for the retailers too, it's, from a manufacturer standpoint, you need to have that portfolio approach. And that's, again, these companies that I cover, that's what they're doing. And as a retailer, I think many of you are already doing this and allocating more and more space to a lot of these different types of offerings in your store, because consumers are heading in that direction. All right, so what's ahead? Global industry consolidation with a question mark? My answer would be yes. I continue to believe this. A lot has happened over the last decade or two, but I think more. And I've been talking a lot about Philip Morris and Altria combining. Obviously, it hasn't happened. I still think it could happen, although, to be clear, Philip Morris's CEO has said recently that he's not interested in recombining. We'll wait, we'll see, because I think now with what Altria has done with Juul and ultimately having access to IQOS, to me it just makes more sense. And I think about it from the context of Juul as they go into international markets. They're in 5 markets, maybe 7 today, a faster way to go internationally. They need a partner, and I do think Philip Morris would be a good distribution partner. If it's not Philip Morris, it could be somebody else. So I think things will be interesting over the next year or two globally from all these big manufacturers. So I also think about some of the themes in 2019 being FDA, E-Cig flavor crackdown. That was discussed a lot today. That's something we're focusing on and watching closely. I don't think they can completely eliminate all the flavors in e-cigs if they truly want to save smokers' lives, and they need to have these alternative products on the market. We also will continue to monitor the impact of Juul because of that huge success and its impact on cig volumes, especially as it relates to Altria. Timing of a lot of these, PMTA and MRTP applications. We're hoping for commercialization of IQOS soon. But I think RRPs ultimately will remain a catalyst for global consolidation. And we've already seen that. I mean, you've already seen RJR and Lorillard combined. You've seen BAT take out the rest of RJR, Imperial got Blue, Japan Tobacco, Logic. I mean, it just makes sense that all of the companies have pivoted to these products. And if I think about it and take a step back, from everything I cover, which is the broad consumer staples sector, it's pretty interesting that my so-called sleepy tobacco industry, I give it a lot of credit for pivoting and doing a lot in terms of disruptive innovation and technology. And a lot of you guys are in the room today. I mean, that's pretty darn exciting versus, when I look at beverages, I wouldn't say there's been anything tremendous or breakthrough, or especially when I look at whether it's Procter & Gamble, Colgate. This is pretty fascinating what this industry is doing right now in terms of, this is just the beginning and where this industry is heading. I think it can be quite exciting. See, and then I already mentioned the PM and MO combo in terms of why I still think that will happen. A lot of it it's the catalyst for me really is reduced risk technology, whether it's Juul and or IQOS. And that is it. That's my disclosures. So I'll stop there and take any questions if you guys have any. I'm gonna go back. Does anyone have any questions? Yes. Oh, wait, I was supposed to suggest to go to the microphone, if you wouldn't mind. Or is it all the way back there? Never mind, your voice, it's fine.
As you look at the market right now, you see a lot of states moving to age 21.
Yeah.
Virginia, where we have stores, it's just waiting for the governor to sign it.
Yeah.
What do you see the impact of a 21 on volume, particularly when you look, if you could talk a little bit about combustibles, moist, and maybe even the vape category?
Yeah.
Because it's something that we're all, as retailers, going to have to plan for as we go in the future.
It's a really good question. So the estimate in terms of the cohort that uses nicotine, or cigarettes, I should say, from 18 to 21, Altria estimates, I think, if I'm remembering this correctly, it's about 4%. So it's still, you would think it might be a larger portion, but it's maybe relatively small. So my sense is that I don't think it will have a tremendous negative impact on volumes. Let's see, I'm on stage with a microphone. It's a fine line I'm trying to walk here with what I want to say. I think about it somewhat similar to alcohol in terms of how things shifted and what these consumers may or may not do. Altria is all behind this in terms of raising that legal age to 21. So if it was super detrimental to cig volumes or their business, my guess is they wouldn't be completely behind, and being proactive in suggesting it. So I think it might be more minimal, and like I mentioned earlier, pretend it happens. You'll probably get like that knee-jerk initial sharp reaction and I'll see it with the manufacturers possibly in terms of a quarter. You guys in terms of retail might see it, but then things will start to sort of normalize, is my guess. And I don't know if that's similar, have you seen that in the state you said? A little? Yeah. 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 True, no different, you're right. I think you're, no different than sometimes those easing of the excise tax increases, yeah. We will see.
I have a question.
Yes.
Bonnie, do you have any thoughts about hemp and combustible hemp and how that, quote unquote, innovation will figure and factor in?
Yes, very broadly. What I cover is, beverages, tobacco, household products. So as far as cannabis, CBD, hemp, huge. Incredibly exciting, the opportunities and how it's literally impacting every single one of my sectors. Now, I didn't mention it, Altria has a stake. They took a stake in Kronos. Early, right? So they're first mover. I've seen Constellation Brands take a stake in Canopy Growth, and so I meet with them a fair amount. This is Canopy, and I know how much they're doing, whether it's CBD, hemp, yes. I have not, drilled down into size exactly the opportunity, but it's pretty exciting, and I, do think it's pretty likely, this is my opinion, that it will be legal on a federal basis or decriminalized. I mean, we've seen more and more states do it. Obviously, a lot of you, I think, are already dipping your toes or very involved. And across the board, all my companies, whether it's Coca-Cola, they've kind of tested. ABI has done a stake, or Tiny with Tilray. And then you've got even Estee Lauder. You've got my beauty companies that I cover in terms of makeup. You've got CBD. And so it's pretty exciting in terms of where all of this could pivot. Yes.
Afternoon. So with the continued success of IQOS and heat not burn in Asia and Europe, do you know if that's being driven mainly from new users, or is it cannibalization of traditional tobacco products?
Mostly it's traditional tobacco. So the idea for, say, Philip Morris is they're cannibalizing some of their existing cigarette business. So you think about, they've got many different brands. So not only is it cannibalizing their own Marlboro brand, but it's also up trading within their portfolio. So some of their lower margin cig users are up trading to IQOS, and importantly for them, they're taking incremental share, meaning so it's taking from their competitor brands. The other thing for Philip Morris is the margin profile on a pack of heat sticks versus a pack of regular cigarettes. For them, given again a lot of markets outside the US, it has a tax advantage. They make more money on IQOS, so they actually want to cannibalize. That's why Philip Morris has been so bold and public about being a smoke-free tobacco company, because they feel it's the right thing, and they also know, quite frankly, it's going to accelerate their growth, and I would agree. So that's what we're seeing so far. But it could, it's hard to know for sure if it's new users. They're careful in talking about it that way. I wouldn't be surprised if it's a little bit of new users as well, but also dual usage, and that's where I think that per cap idea increases. So a guy that's smoking a pack of cigarettes, maybe he's not completely converted to IQOS, so he's still maybe smoking, 12 cigarettes, but maybe he's fully, smoking a whole pack of heat sticks. So per caps for that individual smoker are increasing. It's easier, more places to use it. Anyway, yes.
So with Altria's recent raise in price per pack of cigarettes, can we expect that same raise with the Juul, other vapor products?
Okay, yes, good, but let me be clear, Altria did not say anything. So this is the retailers, and I do this survey a lot, and I ask them all, what they're expecting. So that's the prediction, okay? So assuming they do it, now Altria wouldn't technically have any say in Juul, right? Right now, in terms of that's still being run by the guys at Juul. So they could, yes, I would think, I'd have to go back to some of the other price increases. I would think that any of the E-Cig companies or Juul could also take pricing, or should, to keep that gap also in line or maintain it relative to combustible cigs.
Right, thank you.
Yeah. Yes.
Hey, Bonnie. With potential approval of IQOS and the expansion of e-cigarettes, and you're talking about more profitability, do you think the PE ratios on some of these tobacco stocks will move back to more traditional levels? Would you think?
Yes, I do. I mean, so far I've been darn wrong. If you look at how poorly these stocks performed towards the end of late last year, they've been brutal.
Well, this year hasn't been much better either.
Yeah,
so.
I'm sticking with them, and I'm getting louder, because this is where I get some of the multiple, the pullback or contraction of the multiples, but I think it's way overdone. So As the market gets more comfortable with some of these things, we get a little more clarity from the FDA, and you can see evidence or signs that there's some acceleration. Absolutely, the multiple should re-rate, but that's, that's not a next week.
Right.
This is going to take at least a quarter or two. But already you're seeing, with both companies reported their fourth quarter results, which were better than feared, and again, expectations are very low. That's helped the stocks a little bit in the last couple of weeks, and I expect that to continue.
Okay, thank you.
Okay. Anything else? Somebody else? Yes.
Bonnie, just one quick question.
Yeah.
With the advent that household incomes haven't been rising over the last 10 to 15 years,
Yeah.
but cigarette prices have, how much pricing power do you think cigarette companies have left?
I know. And I didn't catch the very first part of the question.
Well, there's no increase in household income.
Yes.
And so if you look at the percentage of household income,
Yep.
if the one pack a day smoker is at $2,000
Yep.
worth of spend a year,
But there have been some tax benefits. We did some work on the lower income consumer with some of the tax benefits, as well as I'm going to throw out the gas price thing again as well, and all of the consumer confidence. That bodes well in general for their ability to take pricing. I've been asked that question for 20 years, and I get it because cigarettes seem darn expensive. But when you look at it on a relative basis across, here, rest of the world, and we've done this analysis, it's still quite affordable. So, but it's all about that price gap management. I think what's changed, and it's harder to analyze, and is probably a negative, is the fact that you've got substitute, which is E-Cig's, Juul, and depends on where IQOS is priced, which I think it will be premium. So I do think that they absolutely still have power. Are there different periods throughout the year, depending on the year, where there's more or less power depending on gas prices or other things in the economy? Yes. But broadly, we've seen over time their ability to take this pricing. They'll kind of promote a little bit of it back in the beginning, but there's enough that will flow to the bottom line to give them that margin expansion. But it's all about that gap management, I think. That's what we've seen historically. And I do ask, it's in our Q4 Tobacco Talk survey, I don't think I put it in here, but I ask every quarter this same exact question from the retailers. Do they think they have more or less today? And it's still stayed about the same. It's not like it's dropping off like, no, they've lost all their power. So it's pretty consistent.
but do you think that the consumer is shifting because of the price-value equation?
Right now with the deep discount, you've seen them, but then what you're seeing is it's not necessarily a guy going from Marlboro or the more expensive brands all the way down. You're seeing what you might call churn within a lot of the lower price, like a third tier down to the fourth tier. But fourth tier is out, and we're watching it because they've actually done very well. And again, Don called this out. He had the same data that we've been seeing and hearing from our retailer contacts. So I don't necessarily believe it's completely at the expense of the top brands, but that's something that still has to be maintained. So we'll have to wait and see if Altria leads with this price increase. Will some of these, fourth tier brands follow? They haven't, but maybe they will choose to now, and that can change some things. All right. Anything else? All right, guys. I think, is it cocktails now? Was I holding everybody up from drinks? All right. Thanks.